everyone. It's Peeps Come again, and welcome to my YouTube channel. Today we're going to be talking about the Fibonacci retracement tool, and what I want to actually share with you guys is how you can actually use this tool, and also how you can actually set it, and why is this Fibonacci tool important in forex trading. Now, if you're using TradingView, this is how the tool look like. All right, let me just show you guys. This is how the Fibonacci tool looks like. Now, once you need to understand this tool is actually used by a lot of traders in the forex market. All right, and what they actually use this tool for is to actually measure distance in price. That means how far price has gone, and how far they believe price will retrace or pull back to for a possible continuation of the market trend. Now, a lot of people have issue with setting this Fibonacci tool, and I would like you to know that the most important numbers in this Fibonacci tool are this very number that I leave, which is the number 1. All right, and we have the number 50, and we have the number 0. All right, so 50 is like the half of 1 to 0, so this one you actually see is more like 100. All right, let's say we have 100. Okay, and we have 50, and we have 0. Now 50 is the midpoint between 0 and 100, so it's half of this number. So for example, let me give you a picture. Let's say we have this. All right, and this here is 0. I will number it, and here is actually 100. Now the midpoint here, okay, is 50. So for example, now let me number this for you guys. Again, like I said, let's assume this is 100. All right, and let's assume here is 0, and the middle point is 50. All right, so if you actually want to measure this now, or bracket this to make it look a little bit more clean, I could just put a line there. All right, which we indicate as the 100, and put another line here, which we indicate as 0. All right, and another line here, which is the middle, which may indicate as 50. So let me take off these other numbers for clarity purpose. All right, so now what are we trying to achieve with this Fibonacci or Fib tool in this forex market? Most of the time, all right, 80% to 90% of the time in the forex market, after every break of market structure, all right, when we expect the price to actually give us a pullback. So for example, let's say, if you've not watched our video on market structure, please go and watch it. So for example, let's say we have a low that created a correction, and we have price come, and maybe we'll take out that low and we broke structure. All right, to create a high. Okay, now notice how we are coming, and price went, give us this pullback, create a low. Instead of giving us a continuation down, we broke structure. All right, now in a condition that we broke structure like this, so we can safe to say this is our BOS. All right, BOS. All right, and we have our lower low. and our higher high. Now notice if we mark here, which is our higher high, and we take this and we put this here, and we use this other line here as our lower low. All right, so now notice, now most of the time for this price to come back and break this higher high to create another higher high for us, all right, in the forex market, a lot of traders, which is the institutional and hedge fund, all right, they want to see price trade below this 50% of these two, which is the Fibonacci 2, 50%, or even below it to even the 23 or 30%, which is what they assume to be discount zone. All right, discount zone. They want to trade from the discount zone or the premium zone. All right, I will explain the premium. The premium will be the sell side. All right, premium. All right, so these are the major levels these hedge fund institutional traders that have the money that can move the market want to actually place their order. Now, how do we actually apply this Fibonacci or Fib2 into our trading? Remember, I told you that after every break of market structure, we expect price to give us a certain pullback, all right, a certain pullback or retracement of a sort, maybe give us all this kind of market movement. Remember, these are the internal structure, all right, and maybe pull back to somewhere here, which is like 20% on the Fibonacci or 30%. Now, maybe around this area, we may have a fair value gap or a breaker block, all right, around this area. Now, notice this whole internal movement that gives us this pullback before price will eventually give us something like this and give us another higher high, all right. This pullback, a lot of institutional trader or hedge fund will take this Fibonacci 2, all right, and measure from the point 100, which is our lower low, and our higher high. Now remember, if we move this here, the higher high will be 0.100. Then this 0 will be our lower low. Now 50 will be at this point in the middle, which is this midpoint. All right. Now most of the time, these hedge fund institutional traders or banks that have the biggest fund that can actually push this price, they do not want to get involved in continue pushing the market to the upside if price has not retrace or pull back below this 50%. So you as a trader, if you are looking to apply this Fibonacci 2 or Fib2 into your trading routine or strategy, you should be able to know that anything above this 50%, if you are looking for a continuation buy to the upside for price to create a new higher high, you must make sure that the pullback or retracement is below this 50%, so either 20 something or 30%. All right, in this case, you're going to be having a more better trade opportunity with less risk, because this zone below the 50% is considered a discount zone for most institutional and hedge fund trader. So this zone is considered a discount zone. Now, this is for the buy side opportunity. All right. Now, this is for the buy side opportunity. That means you want to apply this through into your trading routine, and you want to actually use it to look for a possible reversal zone. And like I said, you just need to plot it from your higher high to your lower low. Look for a fair value gap, all right, or a breaker block below the 50%. If you find that after the market, after this break of structure, you find a fair value gap or a breaker block, put your fib and wait for that zone for price to actually react. If you see some kind of shift of market structure like I painted here, you can now look for a possible buy opportunity after a shift of internal market structure. Wait for possible pullback to a certain breaker block or a fair value gap as well before you now target your buy opportunity from somewhere here. Have your stop loss below the last low that is created, then you can target this high for possible trade opportunity. All right, so this is how you can actually use this tool to actually take your trade. Now this is for the buy side. Let's look at the sell side of market condition, or the bearish side. We just make an example on the bullish side, so I want us to look at the bearish side. For example, for the bearish side, we have price create a high, come and trade, went back, took it out, and we broke structure. All right, so create a lower low. All right, so remember, before now, this was our previous high, and we have this structure broken here. Now we are looking for a sell opportunity, and like I said, we just need to now make here our lower high and lower low. All right, so now before we broke structure, this was the last point that lead to break of structure, and this very one. All right, now what do? We take our fib 2, we apply it there, and remember, this very level will be our 100, the lower part will be our 0, and the midpoint, which is our 50, will remain our 50. All right, now what do we say? Same thing apply. We want to buy from a premium zone, sell from a premium zone, which is around somewhere here. This is the 50%. All right, we want to see price trade above the 50%, so we want to expect price give us a premium price. So we see price buy back to correct price and trade back maybe above this 50%, so around the 70 something percent thereabouts, or even 80%, give us a change of market structure around here. Then we can now look for a sell opportunity to target price to break structure to create a lower low. All right, so this is how you can actually apply this Fibonacci tool into your trading as a forex trader, using it to identify possible key levels where price can actually shift after every break of structure to continue to the downside or to the reverse side of this market. So I would like to go into the chart and actually show you some possible levels that this has played out. So let's look at this pair, for example. I'm going to be brief because we've wasted lots of time already doing that explanation. So let me just look for example. Notice how price broke structure from here to that high. So let me take this off first, and let's mark. So we broke here. All right, now where is this Remember, at this point in time, this was our higher high, this our lower low. So when price pull back, all right, what do we see? If we take this fib and we measure, you see that price got to the 50% before price did what? Break above. All right. Remember, this is our 0%, 100, 50, and so let's look for other places. Now remember, let me show you another place. After price tap on the 50%, we broke structure to create a high, and we can actually still assume, because the best break was not actually this one, all right, the best high was actually that higher high there, which is this to this low. All right, this were actually the best break. Now notice the pullback that we have. If I should zoom out, you will see that this very pullback, before price actually created this high that we have currently, price have to trade all the way below 50. So if I still extend this, we can see price trade below 50. So actually come back and break above this high, which is the current high we are now. All right, you saw how price retraced all the way back below the 50% before we have a shift of market structure. Price came back after that shift of market structure. So another way is when price have a shift of market structure here. Notice we created this high. Let me mark that, and you can still see how price retraced inside within this internal structure from here. All right, now if we should take the two and we measure that movement, look at that high there and this. All right, what can we possibly see before price broke that high again, this very high? You see how price pulled below the 50%, and notice we have a fair value gap here, this space. So do you see that below the 50% there was a fair value gap? That was why price have to pull into that fair value gap, create a reaction from here, and what do we see? Price traded above this high. Now if I should go back to this first one that I marked, let's look at it again, whether we will see a fair value gap. So let me take this. Remember, that was the high, and where is the low? This is the low. All right, now I want to zoom out to see if around this place we can find any fair value gap that price actually pull back to. Now remember, this was where price actually pulled into. Let me still adjust. All right, so this was the level we have that reaction. Let's expand. What do we see here? This is where the price actually taps in. All right, but we have a breaker block here. Notice this was a breaker block. All right, these were the last candle that created this movement. Now price have to come back and tap into that breaker block. So maybe on my next video I'm going to be making video on what is breaker block, so I can explain that better. So if you're watching my video and seeing this for the first time, do well to subscribe so you will not miss out of any of this information. All right, so you can actually mark structures and just come over to the charts and just do all this testing like I'm just sharing with you guys. Now notice here, let me show you another place. Remember, we broke structure at this level. Look at it. We broke structure at this level, and what did price do? This was the low that led to that break of structure. All right, and this was the high that we were able to have, that high there. Okay, so if you take the Fibonacci 2 and we apply it to the high and to the low, can you see? Now notice how price pull back, and where do price pull back into? Below the 50% to almost 30, like I told you guys. So if I should look at where price react from, this is where price react from. So do you see where price pull into? Inside this block before price did what? Traded and break out of this high. Can you see it? So if you come and test, that is why you are a trader, you should do what? Back test everything that you are told. Come to the chart and test and see the outcome or the result before you even believe it. So you see that after price tapping below the 50%, which is this line, we have a shift of market structure. Price came back, tap, and we go. Now, if I still measure this price, we have this break, you will see that this pullback we experienced before price continue. This pullback is also up to 50% off from here to here. So guys, I hope you learned something from this video. And if you are interested in becoming my mentee, because I'm open up for mentorship, this number here, you can use it to contact me on WhatsApp, and I will be glad to be your mentor. So if you love what you watch and you're learning from my video, please do well to subscribe, like, share, and follow me for more. So thank you guys, and have a wonderful time. Remember to like and share. See you next time.